Hey guys, welcome back to another episode of Proof of Vision. Welcome back to hopefully an optimistic episode, I would say as well. Today I had on Vic. He's the co-founder of Superform. It was really refreshing, especially if you're thinking about the market and you're looking at the market cap of crypto and you're like, shit. This is actually a very refreshing episode because I think Vic, comes from a background that maybe not a lot of us do. Like I certainly didn't. So he's seen the market from like the institutional level, um, but even still kind of has like the crypto values, I think. And you can tell with the way he talks about Superform and the app that they built and the way that they're thinking about their token, that he kind of feels the same way, right? And the team's thinking about it the same way. So yeah, great optimistic episode on crypto. Superform's built kind of a next gen neobank that's kind of been a buzzword, so we talk a bit about that, in the episode about like what the neobank offering actually looks like and, what are some of the advantages of it. And then certainly we dive into, their vaults products and, the role of the token, on the application at the end of the day. So yeah, good holistic episode. Definitely check it out. I think Superform will either have TGE'd by the time you see this or will be TGEing shortly. So, definitely something to keep an eye on if that's to your risk profile. So thanks everybody, and I'll see you on the next episode. Cheers. All right, welcome back everybody to another episode of Proof of Vision. Got a hot one for you today because we have I think a TGE coming up for this project. And they've been making some waves. So I'm excited to get into that. We've got Vic. He's the co-founder of Superform. How are you, sir?
Doing well. Good to be here. Thanks for having me.
Yeah, absolutely, absolutely. Yeah, I guess before we get into Superform, I have to ask everybody I've talked to today. Like the markets are down only, it seems, for forever now. How are you holding up? How are you thinking about things? Is it over, or are we in the cycle, as they say? What do you think?
Yeah, I'm a little disappointed that we had that hype launch video for the up token on Friday and then markets went down only since
That
then.
was it.
I find it quite ironic.
That was the
But we,
local top.
yeah, we didn't know that we were going to draw down from 3K ETH to wherever we are now, but I've generally stopped looking. Um, I think I mean, I'm no longer an investor or trader. Don't wear that hat anymore. But I can say from a protocol perspective, this has been still the best time to be building in DeFi, right? Like all the headwinds are set up, both regulatory, just the amount of infrastructure we have now. And I just feel like it's a question of time before people realize that, so many of these DeFi projects are now very good value bets. But definitely hope we can see some strength in the broader market. And it's weird to see crypto sell off as much as it has compared to stock market, a lot of other very hype trends that feels like crypto's been passed up on.
No,
But
I would agree with that. I would definitely agree with that. And I think we'll see in the next, I mean, 2026, I think is a make or break year actually from a token perspective for many projects, just because, um, I think there's going to be a lot of concentration on a few winners, right? Probably a few select winners, maybe in each category. It's not as going to be as spread out as it was obviously in previous cycles with the capital situation from a macro level and everything that's gone on in crypto, I think in the last few years. So it'll definitely be interesting to see how it plays out. But yeah, I mean, great to get your thoughts on that. Let's talk about you. Let's talk about Superform. Maybe you can tell us a little bit about your background. How'd you get into crypto? What were you doing before Superform, and kind of what led you into the creation of Superform?
yeah, so I've been building in crypto since really 2017. Bought my first ETH in 2016 and was playing around with, the first generation of some of those dexes, just the order book dexes, if you remember, IDEX and Ether Delta, Fork Delta, and all this kind of stuff. And was mostly just a personal curiosity. I just thought the technology was really cool, and it was a new thing that I thought could be a good skill to pick up. And it was just the way markets were working at the time was very inefficient. And my personal curiosity from what I was doing in college was engineering and finance, and studied a lot of like behavioral psychology as part of that. And I just thought crypto was just the perfect perfect playground for a lot of that stuff to really come into action. Through that process, ended up working on Wall Street for a couple of years, analyzing biotech stocks because the bear market was really rough, and just coming out of college, I needed a real job. Some parents would say, but then came back soon enough, right after, right around DeFi summer. Was building a lot of stuff around Uniswap and early MEV days, working with Flashbot's team and a lot of that very nascent MEV info, and all you needed was a node to sandwich on Uniswap, and there wasn't anything beyond that. So joined BlockTower and middle of 2020, and was building out their HFT strategies in DeFi. That ended up turning up into me co-managing the DeFi strategy with my co-founder Blake at Superform. So it was $100 million fund that was investing across small mid-cap DeFi assets. We were mostly focused on the venture side of it and liquid tokens, but turned into us actually performing more strategies like arbitrage between L2s, centralized exchanges, that kind of stuff. And we were managing funds across 15 different chains. It was generally, like, as an institution back then, it was even harder, like practically impossible to reconcile what you were doing on chain with everything that your back and middle office does. And we're like, if it's so hard for us to do it right now, then that's actually impossible for retail to, this entire process of them finding opportunities, executing into them, managing it. It was entirely untenable for us, and we wanted to turn what we were doing for those institutional investors into an actual retail-facing product. And we were seeing all this infrastructure come out. We were investors in some of the new interop solutions, Layer Zero, Socket, Li-Fi. We were kind of seeing that stuff being built, and wanted to combine. We thought it was finally the time to build that into a consumer app. And yeah, both of us left BlockTower at the very beginning of 2022, and we've been building Superform for the last 4 years since.
Yeah, these are my favorite products because especially when you build them kind of out of, like, I guess, a previous role that you were in. I think those are when the best solutions kind of appear, right? Is, hey, I saw this problem as I was managing a fund, or I saw this problem as I was, I don't know, I was scanning DeFi. It's a huge problem, the problem that Superform is, like, trying to solve. So maybe take us into that then. So explain Superform for us. Obviously, you talked about the problem you're trying to solve, which is basically, like, it is so hard to scan DeFi for opportunities, and then even harder probably to maybe think about underwriting the risks of those things. So maybe walk us through Superform and, like, what your overall vision is for it as things progress here into the coming years.
Yeah. So just because I was talking about the historical context, what we started off by building was really what we called a yield marketplace, right? People could permissionlessly list yield products. We did a lot of work on the ERC 4626 standard to actually standardize all those vault products. And then similar to how you had OpenSea for NFTs, we were saying, okay, Superform will be that, but for yield. Now, obviously, very fundamentally different markets, right? And we learned a lot of this over the last few years of building. And we realized that what we really wanted to do with this product was the most useful for people who hadn't even been on chain in the first place, right? The people that are mostly browsing for yield, they're not me and you. They are mostly people that they're not even necessarily aware of Morpho and Aave and Euler and Gearbox and all those protocols in the first place, right? And they needed a level of abstraction above that. So pretty much that experience led us to the beginning of 2025. We're like, you know what, we're going to re-architect the platform. And we're going to focus on building a cross-platform app that can both satisfy power users through advanced hooks. They can lever, they can lend, they can stake, do all that stuff on the desktop app. And then we're going to have a massively simplified mobile experience that's going to be powered by our own vault product, SuperVaults. And SuperVaults are going to be flexible, they're going to be secure, and most importantly, they're going to be this easy to access, cost-effective products. They're not like $10 products on Ethereum just to deposit into. We're going to make sure these are properly accessible to retail consumers. And yeah, we spent all of 2025 really building this thing. And we finally shipped it at the end of the year. But for the most part, what we are now is an entire like a full service neobank that's created these core features of swap, send, spend, and earn. And we've created hooks and everything for that in the protocol, and that's now entirely a decentralized, non-custodial version of what Robinhood and Coinbase and if you look even further back, like your banks really have been able to provide for users. Um, so yeah, we're excited about like the actual non-custodial decentralized product that we're offering, and that's obviously possible through the protocol and also the token governance that we just announced last week.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, non-liquidatable loan. Deposit your assets and access your future yield today. Available on Mainnet, Arbitrum, and Optimism. Head to alchemix.fi to get started. Yeah, absolutely. No, thanks for the overview. Yeah, so I've known about Superform for a while, so I've seen your kind of transformation, into V2 now, where it's kind of, I would call it maybe more of like a curated experience with like the SuperVaults, I think you guys are calling them, right? One question I had for you that's really, I guess, my primary question, I've been following Veda, I've been following the vault space for a while, right? Veda has this thought that, okay, these vaults need to kind of live in the background. We're not necessarily going to create our own neobank, but we're going to kind of like power other interfaces that kind of capture the consumer and capture the distribution. How would you say, like, it sounds to me more so like you guys are saying the opposite, right? Where you're like, hey, that's true, but also like we want to offer like the point of use, for these users and kind of own the distribution channel as well. Is that fair to say, or how are you guys thinking about more so like long-term strategy for the adoption
Yeah,
of this neo ultimately?
yeah. I think both are very fair ways to build. I think vaults are going to be the largest financial infrastructure that crypto has built. Like it's an extension of tokens that's making tokens ERC-20s productive. Like it's a huge area in itself. And when we're thinking about growing SuperVaults, it's like, um, why does someone necessarily want to create a SuperVault in the first place? And so I think because of this new distribution set, right? Like I think an issue that a lot of these existing vault products have had is that they're still marketing to this existing crypto native base, and you have to incentivize people through points programs and tokens and stuff. When realistically, like we don't need to be jumping through those hoops when the thing that matters in a vault is definitionally how safe and secure this thing is, and can it actually be used by people. But sometimes, in the motions of this, there are a lot of things that protocols have to spend time on that aren't necessarily working toward that end objective. Um, I think every fintech, every neobank does plug in a vault product, and I don't think that the vast majority of fintech neobanks create their own vault products. So I'd be definitely like a part of Superform strategy to also plug in our vault products the same way, but we just want to prove that it works first through our own app, and very similar path that Robinhood took. They still don't really have a functioning API or SDK. We're kind of thinking of our vault products the same way. Obviously, they're open source. It's 7540. It's an open standard. Anyone can build on it. We're not going to stop anybody, obviously, and we hope people integrate it. We already have some integrations, but it's not going to be a focus of ours in the near term to, necessarily go to that B2B angle and make sure that SuperVaults are in the Robinhood app, for example.
Gotcha. No, makes sense. Makes sense. So more so focused. Okay, so more so focused on offering this to, I would call them retail users, or even like users that aren't necessarily they're coming into crypto with like less knowledge maybe, but offering that through your own distribution channel makes sense, right? And I think like from a long-term point of view, if you believe like that you've built a killer app, this has a lot of use, has a lot of value, that works, like from the long term. Whoever owns the distribution is really like the king at the end of the day. I think you do have to give away a lot, if you're primarily B2B, right? Especially like on your margins, like you're not going to be making as much margin. Obviously, you're going to give away a lot of that to Kraken, or you're giving a lot of that away to Coinbase or whoever. So I definitely think like it's a big bet to make, right? And if it does work, right, then I think that the margins, become that much larger, for something like Superform,
Yeah.
right?
And that's exactly what we are. We're a verticalized neobank, right? It's like everything from transferring money to the credit card, to the vault products. It's all infrastructure. It took us a long time to build, but is now something that we can actually properly scale with. And the only people that end up benefiting from this are people who, you know, hold and are staking the token.
Makes sense. So then it becomes a matter of building, I guess, the underlying tech we'll talk about a little bit more in a second, but from like a distribution standpoint, how do you guys think about like capturing these users and expanding like the growth of Superform? Is that more like geographical that you're looking at that? Like, okay, this is perfect for users in like X country that maybe don't have good access to fintech, or they want more access and it's kind of proving itself. Like, how are you guys thinking about expanding the distribution then of Superform
Mhm.
outside of, because I think your traction's pretty good so far, right? I think it's like 150,000 users already, on Superform. But how are you thinking about scaling that to the millions?
Yeah, I think a big part of how we get to the next step is, funny enough, it is B2B, but it's not necessarily B2B on the distribution side directly. It's B2B with stablecoin issuers. It's B2B with people who actually want to upgrade their existing assets, right? So Circle's been an investor and supporter. There's lots of products that we're planning on launching with them, as well as other newer issuers. And for them, it's in a way it's actually a regulatory thing because they can't, with all this regulation with Genius Clarity, like you can't actually be marketing yield on your stablecoin, but it's very much like the top in demand feature for users. So pretty much where Superform fits in is like, we now have this distribution angle and infrastructure for all these stable coins to now compliantly, offer things on top of their product. So I think that's going to be a very big distribution angle for us, is just come to Superform to earn yield on whatever stable coin. And then, yeah, the other thing is actually working with existing institutions who want to be managing money on chain, but just haven't done it because they've been unclear of how they can necessarily, use their brand to leverage this new distribution on chain. And Banx actually a great example of this on our cap table is constantly trying to figure out like what exactly are the right things for them to launch on chain, because they might not necessarily have the smart contract experience. They might not have some of the um, to actually bootstrap a vault and like a TBL in this thing. It's not just like a Fireblocks account. It's not a 4DeFi vault that like if you actually want to get capital from outsiders, like there's certain things you have to do. And the mixture of like what we can provide in terms of just the pure technology with their legal regulatory ops side of it is, I think, a huge angle for distribution too, and leverage the tech and credibility to make that happen.
Yeah, absolutely. And maybe like, I know I remember it, just using this as an example, right? Like I think one of the big selling points for Morpho to Coinbase, right, to kind of create this environment, right, is the fact that like the code's immutable. There's not necessarily like a DAO, necessarily this like deciding, what the rules are moving forward. Like that was a big selling point because they could go to an institution and say, hey, look, this is literally just technology. Smart contract based, no, very, very little human intervention, if any, obviously because it's immutable. Um, do you see that as a similar strength of Superform vaults, right? As you're going to maybe sell those institutions on using the Superform technology, like take us into those conversations a little bit. Is that more so what they care about, or are they like, hey, um, we need distribution on chain, like we need help like integrating this asset on chain, more so like PayPal. I know they work closely with Centaura, obviously to like grow, PayPal USD on chain. How are you thinking about this? How are these selling points to these institutions? What do they care most about?
Yeah. What they've cared most about in our conversations so far have been mostly around just ease of use. And I think there's the same UX problem that we identified back when we were at BlockTower, like honestly still exists. Um, and there aren't that many products that are properly towing the line between being like an easy to use centralized product and then being a hard to use decentralized product, right? Like we need to find some way to make those properly decentralized products also easy to use. And that's what I'm hoping, you know, these SuperVaults are. It's been mostly ease of use. I think as more and more of them look to launch vaults, we start having to talk a little bit more about like what the unique distribution side of it is. But for now, they just want good products that they can launch on top of that. They trust the team, and there are a good amount of these vault products out there now. But it's how do they necessarily stand out, and is that something that they feel comfortable with leaving, you know, $100 million in for 3 years? I don't know. So it has to be like really evergreen, permissionless, like solid, right? Can't be permissioned and lots of other things technically that go into that.
No, it makes sense. I mean, would you think that you're more so selling like the SuperVault technology and its capabilities to these institutions more so than you're selling like I think you have like Super USDC as like a V2 like SuperVault, right? Um, there's like the tech side where you could build like a customized vault for one of these institutions, right? And then there's like the actual product of like the USDC product, for example, that could plug into another neobank as a yield source, right? Or a simplified version of an earned product. So it's almost like two different use cases, I guess, right? Not necessarily one fits all, but kind of a
Yeah.
spectrum.
Yeah. So pretty much you have Super Vaults as the core protocol layer, right? And we've built an entire management system and execution software. It's like a fixed API, like all the stuff on top of Super Vaults themselves that's being used in our management dashboard. And that's actually like what 99% of these people are interacting with. You can technically wrap around it and create your own APIs, but I think for the next couple of years that most people would be interacting directly with the dashboard or through our APIs. I think I think that's really where the secret sauce is. Everyone can see the smart contracts. I think like eventually at some point most of these vaults end up looking the same way, right? Like there's going to be like a moderate, you're somewhere on the spectrum for security guarantees, and you might have like a slightly different time lock and different way you update your Merkle root and things like that. But for the most part, it's just variations on it, and then people are going to have to differentiate based on, yeah, like what are you building on top of this that make it something worth using? And that could come either through what we have in terms of like a tech stack built to actually make it easier to manage them, or it could happen through distribution, probably even more that people could differentiate on. Obviously, you could differentiate just based on rewards and APYs and stuff like that. Um, but yeah, it's like the vault space right now is fascinating to me, and we've seen vaults evolve this way over the last 3 years from like very basic ERC. Even before it was ERC 4626, they were just literally contracts that people would deposit into, and there'd be a permissioned role that could just take funds out, whatever. Then that evolved, standardized through 2020 into 2022 into 4626. And then a lot of protocols came along and they're like, well, 4626 isn't necessarily as flexible for our use cases, right? We need asynchronous patterns. Like they need to be able to do a lot of things. Like we don't need everything on chain. Like that's actually constraining us. So let's create this category like on chain asset management, and we'll add some more security and roles, but have them be able to do way more things and not put all the stuff on chain. Very interesting design choice. Like the fact that that came up, I think was a good move for the space. And now we're kind of in the position of like, okay, we have these on-chain financial products, which are one end of the spectrum of being more permissioned. They can do more things and they're earning more money. But wait a second, we're learning things. Stuff like stream happens, right? It's like people will love the high APY centralized products until something like this happens, and then we're like, okay, so how could we have prevented this? Okay, this could have all been prevented if we had a time lock, if actions are being updated in Merkle tree, we were whitelisting targets, like decoding call data. So okay, let's build that, and that's what SuperVaults has been building to this entire time.
Awesome. Yeah, I mean it's I'm glad you brought that up actually, the stream situation, because yeah, I mean I think you hit the nail on the head there, right? In terms of like what the issues were there and what were some like preventables, that could have been in place, right, to kind of guard the user against some of this stuff, and at the very least give the user some more safeguards, I think, to understand what they were getting themselves into. Um, Not to talk about that specifically, but it's more so on this topic of curation, right? With the super vaults, right? There is a level, I would imagine, of curation involved from the Superform team. Um, maybe take us through like how you guys are thinking about that. What are some of the steps you guys are taking to ensure that maybe you're onboarding assets for like Super USDC, for example, that have good security, sustainable yields, etc. Maybe walk us through that ideology a bit.
Yeah. So our flagship strategies consist of 70 to 80% in liquid variable rate lending protocols like Morpho. Um, Now, whenever we're allocating to them, we don't allocate directly to collateral markets ourselves, but we have very good relationships with curators. So we're operating more of like a fund of funds on that model. And whether it's Gauntlet or Steakhouse or ClearStar, we have our own tooling then built on top of that to actually be monitoring collateral markets their end in case they make a mistake. But you know, for the most part, those are all decisions that the underlying curator is making. And then we have 20 to 30% is in Pendle, and we're actually evaluating those collateral markets before we're purchasing those PTs. And we're holding all of those PTs in our flagship strategies to maturity. Um, and that's a combination of, actually at some point we'll very likely publish our framework, but just looking at things like collateral health risk, like what the liquidity exit conditions are, um, always preparing for the worst case scenario here of like there's just no liquidity that can
Yeah,
be swapped out of it, right? Like what are the failure cases? So
makes sense. Makes sense. So you're kind of like, I guess you're kind of outsourcing some of your DD essentially to the curator on the money market side, which makes sense. I mean, I again, especially with like Steakhouse and Gauntlet so far, but I think that they've done, a pretty good job, risk management wise, especially through things like Stream, and some of the other situations which, they had no exposure to because I think they actually performed some due diligence, which is great, but then on the other side of things, on the Pendle side, so you're kind of shrinking the amount of assets you guys actually have to curate maybe yourselves.
exactly.
Um, which makes sense. So I guess take me through on the PT side, like what are some of the things you guys are looking at necessarily? Do you guys have like a hurdle rate in mind for the vaults, for the PTs specifically, or are you looking more so at a scalability and depth, or maybe it's all of the above? Like what are some of the things you guys are looking at, and what are some of the PTs maybe that you guys have onboarded so far?
Yeah. So we actually do have a framework for this that we will be publishing in the next couple of weeks. It is on a case by case basis, like what ends up mattering to us. Um, I think we just evaluated like REUSD for example, and it's like very much seasonality with respect to how the real estate insurance market is being underwritten. So we're kind of looking at some of that. And we have a quant on the team who's this is his entire this is what he loves doing, and we're constantly evaluating these new opportunities, calculating VAR and everything for these, and um, have this model that we've just it's assumptions at the end of the day, which makes it a little bit tough, but through talking to the team, transparency dashboards, I think we're looking at neutral as well, and they have like a dashboard with accountable and um, yeah, people have been doing a lot better job at being transparent as to where all these assets are, and that ends up being a factor in our model. But it's very much like a very in-depth analysis of if this is worth the amount of risk that we're taking, and I wouldn't say we have a particular hurdle rate for it, but definitely would be looking for like assuming that the lending rate, the variable lending rate is the risk-free rate, let's say, uh, would need like a reasonable Sharp that the Pendle PT provides that is worth that maturity risk.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance. Gotcha. Makes sense. Makes sense. And so I think it becomes a pretty easy selling point. Like as you're, again, going back to your end user, right, which is retail, that might not want to scan all these opportunities, or doesn't have the wherewithal to do it, right? And it creates a very seamless experience. How are you kind of juggling the liquidity to maybe like yield I would say the yield to liquidity ratio or so. So you have X amount of percentage of the vault going into liquid assets that you can pull out, as long as utilization doesn't spike, and then you also have 30% or so of the assets going into PTs, which, I mean, you could sell the PTs obviously if you needed to in a pinch, if you had mass withdrawal requests on the vault. But how are you guys thinking about that problem, right? Where you want to kind of sell this as like a liquid instrument. Um, how are you thinking about that, or are you kind of like putting that in the user's face, like, hey, there is the chance that maybe there could be liquidity shortage at certain points in time, but overall across a long enough time horizon, not necessarily a problem. How are you guys thinking
Yeah,
about that?
yeah. The way that we've messaged it is like, so we batch deposits and redemptions. That's how, we've made these products accessible. So redemptions are batched every 30 minutes and deposits are batched every hour. And the manager, the strategist bears the cost of that. And, they can pass it on later in terms of management fee, performance fee, whatever. But for the user, it's just a token transfer into the vault to get shares. The um, actual the time it might take for you to redeem is, you're right, it could be up to, theoretically, if 100% of the vault were redeemed, then yes, all PT positions would have to be unwound. That could be, we could sell them, but we've been saying that that'll be, expect like under severe market distress, sure, it could take from like three days to a week, and we're pretty clear about that. But at the same time, most of these flows have been entirely into the vault, right? And we're just able to net out redemptions with the deposits, and it hasn't been something that we've fortunately had to deal with so far. But I think it's, as long as people are aware that there is this maturity risk, and honestly, like, if this were to happen, like, we could definitely sell down one of those PTs, and it'd be fine for us to take a little bit of a haircut to make users liquid.
No, for
Uh,
sure. I think like you said, it comes down to just disclosures, right? And just making sure the user's aware. And like, I just think about it in terms of like your bank or my bank today, right? We see it's happened in the real world multiple times. Banks are not actually like liquid; they're actually not liquid at all. And so, like, if they had a big problem, right, a big bank run, you're running into the same issue. The only thing that they don't tell you when you put your money into a bank is like you might not be able to get it out, when you want it. It's buried in the fine print, right? So I think like DeFi on this level, kind of going back to the neobank structure, is just such a vast improvement from that because, number one, better disclosures, but number two, you can actually dig in and see, right, if you wanted to, like where these assets are, what assets is this vault deploying capital into, for example. And I think that's like the huge unlock with DeFi technology and like neobanking, as a whole, coming into crypto, is the ability to do that. Just simply like audit this at home for myself if I wanted to,
mhm.
which I could never do in TradFi. So, yeah, I love kind of like the way that neobanking is forming into like, a more transparent banking system, I would say, at the end of the day.
Definitely, yeah. Everything's on chain, and you can verify it. So
Yeah, you can't beat that when it comes to that.
yeah, yeah.
So let's talk a little bit more about, you guys obviously have the product, the base product. You recently announced the token. Walk me through, I guess, the token's journey so far. I know you guys did a little bit of a public fundraise, recently. Maybe touch on that, and then maybe touch on like how you guys are thinking about the utility of the token, right? Like, um, it's been a bad market, like just being frank, for many altcoins, most altcoins, right? But I do think that there is optimism for like DeFi related coins. But it kind of comes back to like, what is the utility of the coin? How does value accrue to the coin? So maybe walk us through some of those mechanisms, how you guys are thinking about this for the up token, as it comes out here. Actually, I think next week.
Yeah. Okay, so just like summarizing what the product, right, is, we have all these banking features, and we have SuperVaults, and we've wrapped it up in both the web app and an iOS app, which is launching tomorrow. Now that'll launch in the US and Canada. We're going to announce that in the EU. We're going to be globally expanding, launching on Android, all that stuff. Um, Superform makes money in three main ways. We have swap fees that come from mobile, especially, and also desktop. We also take management and performance fees on the vaults. So we have our existing ETH, and we're going to launch ones on Base as well. But very nominal management fee to cover some of the costs of that we talked about before on batching and everything, and then performance fees somewhere 10-15%. And then we're going to be launching those vaults with curators, and then any of those fees with curators that gets split between us and the curator. And then the last way we get fees, we make money is through interchange in just our credit card in the mobile app. So lots of cool things we could rabbit hole down there probably, but generally like very excited about our credit offering because it allows people to spend directly from yield. The fact that we have both a cross-platform app means that people on web can actually get higher returns for potentially underwriting some of that credit. And then you have people on mobile that all of a sudden have these accessible credit products that they can, with very light KYC because it's over collateralized and all this kind of stuff. Like I think very excited about that. So that'll be launching later in the quarter. But between those three things, that's the vast majority of Superform revenue. People that are staking up can get key governance and coordination ownership in the system. So vaults are underlaid by this validator network. That's how we can still say that these vaults are decentralized, non-custodial, is because there are validators that are actually updating coming to consensus on what the price per share of all these vaults are. And you have to bond up to actually participate in that network. And then there's a lot of products that we're working on where whether it's the credit card or super assets where actual governance is very important because you can vote on things like LTV parameters, where liquidity is going, all that stuff. Now, out of these revenue streams in a compliant way, we're going to make sure that token holders benefit from this. We're committed to discretionally buying back tokens if that's part of it, but generally making sure that revenue can flow back to token holders is token holders benefit from that is very important to us. But you're totally right. Like I think the token market has been very tough because there hasn't been the right kinds of disclosure and transparency that tokens deserve, and people are kind of stuck. Like they're kind of holding the bag right now because token holders didn't have any rights. Like they're being told that you never had any rights, right? And that really sucks. We were token investors at BlockTower, for like 5 years ago, and it's like, and back then no one had ever asked these questions, and tokens would still do okay. I'm glad people are asking these questions now because I think it's time. We're going to be. We actually just published our token transparency doc on our foundation site. We're going to be talking more about it this week. But everything on exchanges like market makers who we're working with, like day one supply, where all that's coming from, like vesting terms, all that stuff is in there. We're very much open book, and as much as we can, we want people to understand that like our token really needs to exist, and there's clear value that's being generated by the business, and the token exists to really just catalyze a lot of that growth in a product sense.
Gotcha. No, makes sense. Makes sense. I mean, I think you're hitting, at least for me, on all of the key bells there that I listen for, before I look at a token. So no, I think it makes sense. Ultimately, I think you're right. Right. I think like when tokens were doing well, nobody cared because token go up. Why would I care, right? But then when you see some of these bear markets and some of these crab markets we've been in, right, that's when token holders are like, hey, my token's gone down, but this company is making billions of dollars. So like, why is this happening? Where do we see kind of like the value flow? And again, I think like with just from like a greater market perspective, like finally kind of with like the Uniswap situation hopefully being resolved, and you're starting to see things like Aave, which has a massive business obviously, and the things that they're doing on the token side to make sure that value is coming back to the token. Hyperliquid, same thing. It's going to be interesting to see, like I said at the beginning, like more and more of these token models that have these safeguards in place, and it's clear as day, like what the rights are. I think those are the ones that are ultimately going to do well long term. So I think Superform's thinking about it in the right manner.
Yeah, and I think most DeFi protocols are directionally like very very correct on this. It's like, you know, have core governance, and then make sure that yeah, people that have ownership actually benefit from it. I think the um the one thing there that has been difficult for projects to message is um, just the legal landscape around tokens, and I think a lot of the stuff that's coming out with stuff like market structure is gonna clear that up for a lot of people. But Superforms, we've been it'd be very sad if the end state of crypto was no tokens, only equity, and it was all these big banks and fintechs, right? Like, tokens is what made crypto great for me, and I imagine most people that came into this space. And I think it's honestly like one of the biggest moats that crypto native businesses have is the fact that we can just issue a token and have this be owned by anyone around the world. No KYC, permissionless. I think that's a very important element. But who knows? Maybe people don't care about that anymore. I don't
I
know.
know, right? I have this debate with myself every day, and well, I guess every day in the last like year and a half or so, and I'm like, man, like we really lost it. But this is an invigorating conversation for me because if you're listening to this and you're having like, I don't know, doubts, you're feeling down about crypto, down about the market, like there are builders like Superform and others out there that are thinking the exact opposite. Like, hey, this is this is actually why we got into this business, right? Is because of innovations like token issuance on chain, right? Or, vault products that can, perform, well outside of the risk-free rate, right? But doing so in a risk-adjusted way. Like those are huge innovations, and I think ultimately, if you think about it that way over a long enough time horizon, then DeFi is going to win. That's my personal opinion. So
100%. And I think it's on builders to do a better job of like disclosing a lot of this stuff the same way how, I mean, like IPOing is difficult, right? Like it is hard to take a company public. It should be hard to launch a token or to get people to buy your token. It should be hard. But unfortunately that's just not the reality that crypto has been living in for the last couple of years. So it goes both ways, I guess.
absolutely. Well, hey, I know one thing you've done a great job on this interview. Great conversation, Vic. Anything you want to leave us with? I know, you guys have the token sale coming up next, or sorry, the TGE coming up next week. Um, Anything that users should be kind of keeping an eye on or keeping an ear out for?
Yeah, it's big. It's a big couple weeks. The mobile app's launching in the US and Canada, and soon to anyone who's listening in the EU. We're applying to that this week and hoping for some good news. Um, as always, um, we're always looking for new protocols, new assets, new chains to launch with SuperVaults. But we're going to be opening SuperVaults up as a platform, as a management platform this quarter. And to any institutions that might be listening, love to work with you all and make it easier for you to launch those products on chain. Um, and yeah, token next week's going to be that's top of mind right now, and making sure that we have everything in place for that. But all everything looking quite good there. And yeah, uh, excited for if there are things that come up as part of the uh, general like process of us getting the token out there. And curious also, your thoughts maybe on what projects should be doing more of for there to be good, a good environment around tokens again, but something that we prioritizing and gonna be doing more of. So
Yeah, absolutely. Appreciate your thoughts, Vic. Appreciate your time as well. I know you guys are insanely busy, so thanks for spending 40 minutes with me. Chatting about DeFi, chatting about what you guys are doing. It's been great. For those of you listening to the episode, we will link you out to where you can find Superform in the show notes. And obviously keep an eye on Alia Research as well. We'll be coming out with some educational content that you can digest, whether you're an institution or you're a pro retail user, or even a general DeFi user. It'll make your life a lot easier when it's come time to like due diligence these products and figure out what's the best path for you, for your capital. So, thanks, Vic. Thanks for your time. Thanks everybody for tuning in to another episode, and we'll see you on the next one. Take care.
thanks, guys.